Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market began the new year where it left off last year, with investors very nervous about, well, the bear market that we're having, and also nervous about, well, they might miss the next rally, as we have seen giant moves going on back and forth. At the end of the year, we actually had a 1,000-point up day in the Dow, and then as we come into this year, we had a day that was down 500, that came all the way back, and another day that was down 700, and then today on Friday, up 700. So just huge amount of movement that's going on right now. And just maybe when you thought that the tone had changed and gotten better, then Apple warned. Apple blames their sales slowdown on the trade war and the slowing in China. Truth is, Apple's not competitive in China, and the Chinese device makers make very similar products for much less money. So you can't really blame China or the slowdown or the trade war on the fact that they're just not competitive there in China. And Apple, their executives, well, I would call it hubris, thinking that they could sell $1,000 phones here in the United States with no issue, and in China, where they, well, you know the kind of money they make there. I mean, it just doesn't make any sense to me. So they plain failed to be innovative. They're not keeping up with a product base that is much more innovative in other companies, and it's really incorrect, or proving incorrect, that their service growth can really compensate for what has been the huge margins that they've had in their devices. So I really think that they're hoping that, you know, service can cover the errors that they've had, but that's really not the case. They use their massive tax benefit to buy back shares in a massive amount, something over $50 billion last year. And that, of course, has also been a problem for Warren Buffett, who is a huge shareholder in there, and just in one day lost $4 billion. And since his big position was created or added to back in September, down some $21 billion on the close on Thursday of this week. Of course, improving a little bit as the market does get a bounce, and Apple is getting a bounce. Apple, we're going to show you this in our worst for the week. It's going to remain a big weight on the market, and the heaviest weight in the NASDAQ index, the other three stocks, Apple 9% and Microsoft and Amazon around 10% weighting. All of them have, in our opinion, very negative patterns, and they are going to continue to weigh on the NASDAQ index outside of times like now, where we have the bounces going on. China situation is really putting weight on them, and they have stepped up and want to initiate talks, and the U.S. and China will be back talking this week because the trade war has hurt. It's hurt China. U.S. data is mixed, bad ISM, strong payrolls, and with China's own organic growth issues, that is going to continue to weigh on world economies, playing out overbuilt and false growth going on, and that is going to continue to be a problem. Plainly, world economies are slowing around the world, and all at once these central banks are withdrawing this massive amount of stimulus that they've had all the way since 2008. And when you do that, it's going to put pressure on the financial markets. I think that Powell is getting the message he came out and gave some speech that on Friday that is he's really trying to calm the markets. I'll tell you a little bit more about that in a moment. And I basically had said, if you watched my year-end show, that the Fed's done. I mean, maybe they'll find a way to sneak in an interest rate increase in 2019, but I think that they're done. You just can't have all of these economies draining all at once and not cause big problems. And as I also said in my year-end report, you know, a 2.5% Fed fund rate shaking up the markets. This is basically at the inflation rate. So you're getting free money based on inflation, and still that's upsetting the market in a big way. So things are incredibly fragile. And I think that they're all going to get on board with trying to backtrack on some of this before markets completely implode, which, of course, we think is going to happen. Add that to the Democrats now being in power, and they will do anything anti-Trump, as you can see going on right now. So we're in for a huge amount of negative background news going all the way into the 2020 election. So we can look for the market to continue to be upset by this, and we're going to hear impeachment more and more. We had said that we thought at the end of last year that January and even into February would be a better period for the stock market. We were expecting the rebound that we think began some week and a half ago, and it's likely to continue. I'll give you some targets at the end of the show for the upside. But I say in this rally that we're getting, it's really going to be an important thing for investors to understand that the damage that was done in the markets is likely to continue. I wouldn't believe it. I think we're in a worldwide bear market for equities. We've seen many markets down over the measurement that analysts use at 20%. S&P 500, well, just shy of that, but it doesn't really matter. Devastation has happened in many stocks. And I think that there is going to continue to be a lot of weakness in the markets as we move forward. The bear market that I think is worldwide, I think it just started. I think it's important to consider when you're going to sell this rally. Stay tuned, because we're going to talk about this in coming months as we see how the rally that we think started now, how long that lasts. Let's take a look at the 60-minute chart of the holiday shortened week that we have had, where we see the S&P 500 on a 60-minute chart, gray area intraday, and the white area the overnight trading. As you can see here on Sunday night, Monday, we got a lift as Trump and Xi say that they're talking on trade, and optimism was growing that that's going to be dealt with. China PMI plunged to 49.4. That was a big problem. And we saw the market come down here on Monday and then come all the way back. You could see that right there as we wound up the end of last year. And then we were closed for New Year's Day, of course. And then overnight here, China manufacturing data came out really weak on Wednesday morning, and we had a big plunge. And then the market comes all the way back from down 500 points, just a big upside move there. But then, just right after the market closes, Apple guided lower for the first time in 15 years. And this big decline that came really crushed a lot of the stocks worldwide in the technology sector, and the yen exploded upward in a safety bid. Now remember, the yen is one of our picks for the best of the year, and it's really looking really super great already. Here, ADP numbers came out, up 271K, the private sector jobs. That was a good signal that we were going to get some good numbers here at the end of the week. Airlines here had a big drop as Delta lowered their guidance, and the ISM had the biggest drop in almost 4 years. So this was what led the stock market to fall some 700 points here on Thursday. Then news comes out that U.S.-China to resume trade talks next week, And then the payroll numbers came out, up 312,000. U3 unemployment rate up to 3.9%. The reason it popped up is because the participation rate moved up to 63.1% as more people come into the payrolls, and that, of course, affects the number just based on the math. Wages up 0.4, and year-over-year wage growth up 3.2%. Believe me that the Fed is going to have their eyes on that. And the bond market moved down on the news, and the question is, the Fed back in play? Is this good news or bad news? But then the good news came out, at least for the markets that got some relief, that pushed the S&P 500 up well over 80 points on the day, 700 and change up on the Dow. Powell said in a speech he will shift policy quickly if global growth slows. And he says, I will not hesitate to tweak the balance sheet reduction. Well, those are the two things, the double hit, the raise in interest rates and the pulling of funds out of the economy through the balance sheet reduction. So that really gave investors some hope. And he says, we'll watch the economy and be patient with policy. Well, I knew that was going to happen. And he said, I will not resign if asked to do so, believing that the president has no control over the Fed. And plainly we can see that we have given control of the Fed some 107 years ago over to the Fed and on Jekyll Island. And that, of course, has seen the Fed cause tons of difficulties and an erosion of buying power of almost 98% for dollar buying over this 100 and some years. Keep them in power, keep them doing this, and we're going to keep having these boom and bust cycles that are going to get worse and worse, and continue to have these issues where stimulus really won't help anymore and the markets get to be afraid. I'm telling you now that the risk of implosion out there in world markets is very, very high, and that this big update that we see in the market today, well, that's not going to be indicative of a big bull that's starting all over again. Stock market for the week, major indexes up over 1.5%. They're also up over 3%, as that one benefits more from interest rates coming down, or at least stalling in here. Bond market 30 years up about a point or so. That's a big reversal Friday where they give up almost 2 points. We saw the TNX the 10-year give up about 9 basis points or 8 basis points or so, and we saw a low on the 10-year of yield about 2.55% in that moment of panic on Thursday, and then rebounding to 2.65%. We think that was an important low yield, and our people who get our charts can see that as we have that drawn on our chart grids, and we include the TNX or the 10-year on our analysis on our charts. Want to get our charts? All you have to do is become an askSlim member. That is it for the stock market, bond market. The dollar very choppy, lost about 0.25%. The gold market makes a high of about 1,300. And Friday it has a big reversal to the downside, up a few dollars on the week, not much. Oil jumps up nicely as we expected, up about $3, and hopes for OPEC being able to deal with the issues and actually a little better inventories number. What comes next is our best and worst stocks for the week, and I think you're going to find something of interest in here. All right, for the best and worst stocks for the week, what we do is show our cycle analysis. This is a very unique style of analysis if you are new to our site. And what we do is we show the rhythms of the market, essentially the heartbeat of the market. And that is, we do that on multiple time frames. You can learn about cycle analysis by simply going to our workshop page on the askSlim site, and you'll be able to watch a video on there where I explain about our 20 video module wonderful workshop. I think there's no way you're going to learn more about charts, and you will definitely see charts in a very different way than you have before if you do take that workshop, and you'll understand more and more about the way I illustrate this analysis here. Follow me on Twitter at askSlim and become a YouTube subscriber, and go to our membership page and take a look at all of our memberships there and see which one fits for you. I think it's going to be just enlightening when you look at all the content that we put out there every single week. First stock we're going to look at here in the best of the week is Celgene. Now, we've got cycle analysis on here, but I got to tell you, I backed into it. Stopped following this one a while ago because it was kind of erratic and really hard to trade. And but now I go and I look back and I say, hey, this was some interesting things in here that were going on. But I could have never, ever understood that Bristol Myers was going to come in and pay $74 billion for this company. So this is going to come out of our list. This is the biggest gainer for the week at 33% to the upside. Like I said, I really could not have guessed about this one. That helps Gilead. Gilead is up about 7% on the week. And this one, you could see the cycle analysis pretty clearly in here. The blue line, the blue ideal cycles there are the IBB. That's the biotech index. And you could see that the low that came here in Gilead and the timing when this Celgene news came out was right spot on with where the expected low was in the IBB index. It's a little bit early by a couple of weeks in Gilead, and now moves it quickly in the first week up to the resistance zone. So when you see that kind of a move in the first week, it's rare that it would be signaling anything other than more advance. So we're expecting it at worst case to get up into this top part of this resistance zone, maybe up to 72, and maybe through that. First week up, and I would call that, you've got to read it as positive when you see something like that in Gilead. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you'll get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.
I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising